One desirable characteristic of any tax structure is equity, that it be deemed to be fair to all taxpayers. A tax structure seeks to be efficient. It seeks to obviously raise revenue, but it must also be deemed to be fair. Equity is based on two principles: the ability to pay principle and the benefits received principle. The ability to pay principle suggests that the amount of a tax liability should be related to the ability of the taxpayer to pay. One component of this is vertical equity. This suggests that the amount of the tax liability is correlated with the ability of the taxpayer to pay, whether it's based on income or it's based on wealth. So the greater the ability to pay, the greater the tax liability. The ability to pay principle is the argument for what is called a progressive tax structure. A tax structure is deemed to be progressive if higher income earners pay a larger share of their income in taxes. Not just more taxes than low income earners, but a larger share of their income in taxes. So in the illustration, we see that the highest income earner is paying 60% of their income in taxes, the middle income earner 50%, the low income earner 33%. This is a progressive tax structure. Most income taxes around the world are progressive. Here's the example of India, which has no fewer than 7 different tiers of taxation. And the tax rate rises as we go to higher tiers. A progressive income tax structure results in after-tax income being less unequal. It reduces inequality when you compare the after-tax income to the gross income before taxes are levied. The opposite of progressive taxes are regressive ones. In a regressive tax structure, higher income earners pay a smaller share of their income in taxes. This would be the case, for example, if everybody ends up paying the same amount of tax as in the case of a flat tax. In that case, the share of the tax for a high income person will be less than the share out of a low income person's income. Regressive taxes have the effect of exacerbating after-tax inequality. Related to the concept of vertical equity is horizontal equity. Horizontal equity says that those who have the same ability to pay should have the same tax liability. Some jurisdictions will violate horizontal equity if, for example, they levy a different corporate income tax rate on different industries. If the corporate tax rate for banking and telecommunications is a higher rate than for agriculture. So, as reasonable as horizontal equity sounds as a principle, it is often enough violated. The second principle of taxation in pursuing equity is the benefits received principle, which suggests that the tax liability should be based on the amount of the benefit received from the services funded by the tax. Many taxes are adherent to the benefits received principle. Petrol taxes are often the basis of road maintenance and and road construction. And since the more you use the roads, the more petrol you buy, then the more taxes you're paying. And that is consistent because you're the one using the roads more. Property taxes are also an example in many places of the benefits received principle. Property taxes in federal systems are often collected and administered by the local jurisdiction, the province or the state or the parish. And property taxes are used to fund local services that benefit only those who reside within the area, like schools and road cleaning and paying for streetlights and maintaining parks. Well, because those benefit those within the community, then it tends to raise the value of property or affect the value of property in the community. So property taxes are paid by those who benefit from what property taxes tend to be used for. The United States is an example. There's a federal government, but property taxes are the province of the states. The states levy it, and the states use it to affect the value of property ultimately within the state. A third example of the benefits received principle, and a rather obvious one, is user fees. When you actually pay a fee directly to use the service. So if a public facility, perhaps a park, has a user fee, perhaps a medical clinic has a user fee, then those who use it are the ones that pay. So that's characteristic with the benefits received principle. So equity in taxation can be pursued by using the ability to pay principle and the benefits received principle.